Hey everybody, what's going on? It is James here with Crypto Common Sense, and in today's video, we're going to dive more into trading, and I'm going to do another trade tutorial for you instead of doing a Bitcoin Bytes video. Before I jump into the content, please do me a huge favor, hit that thumbs up button, subscribe to the channel, and make sure you click that bell icon to get notifications when I release new updates. So a few days ago, I did a video about Ethereum. I talked about the fact that I wasn't sure why people were getting so excited about what is essentially a counter trend rally. And I drew this demand box that has now turned into supply on that chart. And so in this video, I want to show you a very simple technique you can use to find smaller time frame trades. So this is obviously a weekly chart. We have this box here. We could see that price was coming up to that box, and we see that so far it got a little baby pullback. Now on a weekly chart, that's not a meaningful move. We're still waiting to find out whether this is going to be rejection here or whether this is going to break through and become support and demand all over again. So now if we zoom into a smaller time frame chart, let's say for example we look at a 15-minute chart, we're looking for a scalp trade, maybe like a 2-to-1 trade. We can see that it actually jumped right up into that supply box. We can also see that it is leaving behind bigger sell volume bars than it is buying volume. Right here, buying volume was increasing and then boom, dump. Buying volume was increasing and then boom, dump, right? So it's a sign, it's not enough reason to take a trade, but it's a sign that bulls may not be as strong as the bears here. Then if we take a look down here, we can actually see that we had double bearish divergence. Again, this is a 15-minute chart. So if we go up, we got a higher high there, another higher high here. At the same time, we have RSI putting in 2 lower highs. And so that's a double bearish divergence. And in fact, you wouldn't have known it was going to go quite that high. You would have been looking at a divergence back on this candle with the big wick. So right there, you could use that divergence plus that supply knowledge to take a trade that looks something like this right on the close of this candle, have about a $43 stop loss on Ethereum. It's a scalp trade. It is not a trend trade. So just go down for like a 2-to-1, trying to get in and out quickly. And in this case, right there's the trade. In here, out here. Didn't go quite as quickly as what I would like on a scalp trade. I really like to see them play out in a couple of hours. This one took several hours. Looks like it took about 16 hours. So not ideal, but the trade would have worked out. And it's really just as simple as, hey, look, there's a supply zone. I know that it's likely to get some type of bounce off of that, some kind of rejection. Even if it's not going to be an actual rejection where price moves back down to say $1,000, we know that at least on smaller time frames, there's probably going to be some selling taking place there, and we can get in there and get us a little scalp trade. And then if you look further to the right, once it started falling back outside of that, ranging underneath it, and then failing to come back inside of it, you could start looking for more trades over here. For example, if you draw this up as a little range here and say, hey, it's trying to break inside of that, it's failing to do so. And once it fell out of that range here, or once it left behind this, wick here, you might have taken a little scalp trade. You might have tried something like this, right? Which would have got stopped out. You might have also tried something like this with the range high, done a little 2-to-1, and that would have looked something like this. So a couple different ways to do that. Other people might have said, no, I'm not going to get that aggressive. Maybe they waited over here, right, for this little, right, downtrend. Remember how downtrends work? Just like stairs. They might have said, hey, I'm going to get short. This green candle I wouldn't get short of that green candle. It's too strong. But maybe they got short on the close of this red candle. I think it's pretty aggressive, right? Something like that. And that trade probably would have been stopped out. Oh, it'd still be open. I don't love that trade as much, right? But the bottom line is, again, it's all about knowing what's going on those larger time frames, because once you know that, like for example, here's a 4-hour chart. Let's take all this box off, and let's take this off and the divergence off. Now, if you're just looking at a 4-hour chart, forget RSI, just look at the price, nothing else, just price. Look what's happening. See that? It's making lower highs, and more importantly, it's making lower highs with wicks. If you're making lower highs with full body candles, that's not that strong of a bearish signal because there's still a lot of buyers there. But if you're leaving wicks behind, that's a sign of supply. And once you get 3 of those like this, 1, 2, 3, where you can connect and make a trend line, then you can start looking at, hey, I think this is probably going to dump from here, right? Get short on the close of that green candle, a little 2-to-1 scalp. Looks like that. In this case, it went further. Could have actually got over 4-to-1, but you wouldn't have known that, right? If you're scalping, typically 2-to-1 is what you're scalping. It's just a quick in and out. Boom, boom, boom. All right, so just I want to open your eyes to the fact that trading is not difficult. Trading is not complicated. People make it complicated. It's actually really simple stuff that you can look for. For example, hey, look, here's a weekly chart. Hey, look, that's used to be demand. It's probably going to be supply. It's either going to do something like this and go back down, or it's probably going to do something like this and then try to break through. Either way, there should be some kind of miniature rejection at the very least off of that level, and that's how you zoom in. Okay, there's my weekly chart. Zoom into a 5-minute or 15-minute chart, or 1 hour, 4 hour, whatever the case may be. You zoom into those smaller time frames, and that's where the scalps live at. If you'd like to learn more about this and other trading techniques, of course, you can check the description for links where you can join my trading course that will also give you access to my proprietary trade indicators and my private Discord group. As always, please remember I am some guy sitting in a spare bedroom, and that means that nothing in this video is financial advice. You should always go out and do your own due diligence and seek out professional financial advice from a licensed financial advisor before making any type of investment in cryptocurrency, the stock market, precious metals, Forex, or any other tradable asset. This is James with Crypto Common Sense, reminding you to trade safe. I'll talk to you soon.